Imagine being free from money worries, living a life where you don't stress about bills or unexpected expenses. That's the dream, right? Well, achieving financial peace isn't just for the rich or lucky. It's about smart habits anyone can learn. By the time you're 45, having good money habits can make all the difference in your life. These habits aren't just about saving or budgeting. They're about creating a secure future for you and your family. In this video, we'll explore 12 key money habits you should master before you hit 45. These habits will help you build a strong financial foundation, giving you the confidence to face whatever life throws at you. So, let's dive in and discover how you can take control of your money and your future. Habit 1. Create and stick to a budget. Meet Sarah, a woman who turned her finances around by creating a budget. Before budgeting, she was always worried about money, often running out before the end of the month. One day, she decided to take control. She listed her income and expenses, tracking every penny. Soon, she saw where her money was going and made adjustments. By cutting unnecessary expenses and setting limits, Sarah started saving more and worrying less. Budgeting is like a roadmap for your money. It helps you see where you are and where you need to go. To start, write down your monthly income and list all your expenses. Categorize them into needs and wants. Set limits and stick to them. Review your budget regularly to stay on track. With a budget, you can manage your money better, save more, and avoid unnecessary stress. Habit 2. Build an emergency fund. Imagine John, who faced a sudden job loss but stayed calm because he had an emergency fund. This fund was a financial cushion that kept him afloat while he searched for a new job. An emergency fund is money set aside for unexpected expenses, like medical bills or car repairs. It gives you peace of mind and prevents you from going into debt during tough times. To build an emergency fund, start by saving a small portion of your income each month. Aim to save enough to cover at least 3 to 6 months of living expenses. Keep this money in a separate savings account so you're not tempted to spend it. Building an emergency fund takes time, but it's worth the effort. Having this safety net will give you financial security and the confidence to handle any unexpected situation. Habit 3. Pay off high-interest debt. Meet Lisa, who is struggling with credit card debt. The high interest rates were making it hard for her to pay off the balance. She felt trapped, but decided to take action. Lisa focused on paying off her high-interest debt first. She listed all her debts and prioritized those with the highest interest rates. By making larger payments on these debts while still paying the minimum on others, she slowly reduced her burden. High-interest debt can drain your finances and make it tough to save. To tackle it, use strategies like the avalanche method, where you pay off the highest interest debt first, or the snowball method, where you start with the smallest debt. Reducing high-interest debt frees up money for saving and investing, giving you more financial freedom. Just like Lisa, you can break free from debt and build a stronger financial future. Habit 4. Invest for the future. Think about Emma, who started investing small amounts in her 20s. Over the years, her investments grew significantly thanks to compound interest. Investing is a powerful way to build wealth over time. The sooner you start, the more you can benefit from the growth of your investments. Investing isn't just for the wealthy. Anyone can do it. Start by learning the basics of stocks, bonds, and mutual funds. Consider using a retirement account like a 401k or an IRA, which offer tax benefits and help you save for the future. Even small, regular contributions can add up over time. Diversify your investments to spread risk and maximize potential returns. Remember, investing is a long-term game. Be patient and stay informed. Just like Emma, by starting early and being consistent, you can secure a financially stable future and enjoy the benefits of your smart investments. Habit 5. Diversify your income streams. Consider Mike, who felt secure because he had multiple sources of income. Besides his regular job, He earned money from freelance work and rental property. When his main job faced cuts, Mike didn't worry because he had other income to rely on. Diversifying your income means not depending on just one source of money. It protects you if something goes wrong with one of your income streams. To diversify, think about your skills and interests. You could start a side hustle, invest in rental property, or create passive income through investments like dividends or interest. Even selling products online or freelancing can help. By having multiple income streams, you reduce financial risk and increase your earning potential. Just like Mike, you can enjoy more security and flexibility in your financial life by diversifying where your money comes from. Habit 6. Live below your means. Meet Jane, who found financial freedom by living below her means. Instead of buying the latest gadgets or dining out frequently, she chose to save and spend wisely. Living below your means spending less than you earn. It's a simple yet powerful habit that helps you save money and avoid debt. To do this, focus on your needs rather than your wants. Track your spending to identify areas where you can cut back, like dining out or impulse purchases. Prioritize saving and investing over spending on non-essential items. Consider cooking at home, using public transportation, and buying secondhand items. Living modestly doesn't mean depriving yourself. It means making smart choices that secure your future. Just like Jane, by living below your means, you can build savings, avoid financial stress, and achieve long-term financial stability. It's a habit that pays off in the long run. Habit 7. Save for retirement. Imagine Alex, who started saving for retirement in his 20s. By the time he reached retirement age, he had a comfortable nest egg to enjoy his golden years. Saving for retirement is crucial because it ensures you have money to live on when you stop working. The earlier you start, the more time your money has to grow through compound interest. Begin by opening a retirement account like a 401k or IRA, which offer tax advantages. Aim to save a portion of your income regularly, even if it's a small amount. Many employers offer matching contributions to 401k plans, so take advantage of this free money. Review your retirement plan regularly to make sure you're on track. Just like Alex, by saving for retirement early and consistently, you can secure a financially stable future and enjoy your retirement without financial worries. Habit 8. Understand and improve your credit score. Consider Lisa, who faced high interest rates because of her low credit score. She decided to learn about her credit score and take steps to improve it. Your credit score affects your ability to get loans, credit cards, and even rent an apartment. A higher score can save you money by qualifying you for lower interest rates. To improve your credit score, start by checking your credit report for errors. Pay your bills on time, as late payments can lower your score. Keep your credit card balances low and try to pay off debt instead of just moving it around. Avoid opening too many new accounts at once, as this can negatively impact your score. Over time, these habits will help improve your credit score. Like Lisa, by understanding and improving your credit score, you can enjoy better financial opportunities and save money on interest and fees. Habit 9. Make informed financial decisions. Think about Tom, who once invested in a business without researching it first and lost a lot of money. He learned the hard way the importance of making informed financial decisions. Making informed decisions means understanding where your money is going and why. Before spending, investing, or taking on debt, do your homework. Research thoroughly, seek advice from trusted sources, and understand the risks and benefits. Compare prices, read reviews, and don't rush into decisions based on emotions or pressure from others. For investments, understand the market and the specific investment. For purchases, consider if it's a need or a want. Tom started making better financial decisions by staying informed and asking questions. Just like Tom, you can avoid costly mistakes and make smart choices by being well informed. This habit will help you manage your money wisely and achieve your financial goals confidently. Habit 10. Plan for major life events. Meet Rachel, who planned carefully for her wedding, buying a home, and starting a family. Because she saved and budgeted for these events, she avoided debt and stress. Planning for major life events means anticipating big expenses and saving ahead of time. Start by listing upcoming milestones like weddings, buying a house, or having children. Estimate the costs and set a savings goal for each event. Open separate savings accounts to keep these funds organized. Create a timeline and regularly contribute to your savings. Adjust your budget to prioritize these goals. Rachel's careful planning allowed her to enjoy these life events without financial worries. By planning ahead, you can handle big expenses smoothly and avoid taking on debt. Like Rachel, you'll be prepared for life's big moments, making them more enjoyable and less stressful. Planning for major life events is a key habit for financial stability. Habit 11. Protect your assets with insurance. Imagine Mark, who faced a house fire but didn't worry because his home insurance covered the damages. Insurance protects you from financial loss when unexpected events happen. It's important to insure your valuable assets, like your home, car, and health. Start by understanding the different types of insurance available: health, auto, home, and life insurance. Evaluate your needs and choose the right policies to cover potential risks. Regularly review your insurance coverage to ensure it's adequate and update it as your life changes. Paying for insurance might seem like an extra expense, but it can save you from huge financial losses in the future. Just like Mark, having the right insurance can give you peace of mind and protect your hard-earned assets. By securing proper insurance, you safeguard your finances and ensure stability, no matter what life throws your way. Habit 12. Regularly review and adjust financial plans. Think of Anna, who reviews her finances every few months. This habit helps her stay on track with her goals and adjust to changes in her life. Regularly reviewing your financial plans ensures you're on the right path and allows you to make necessary adjustments. Set aside time every few months to look at your budget, savings, investments, and debts. Check if you're meeting your financial goals or if there are areas where you need to improve. Life changes, such as a new job, a baby, or buying a house, can affect your finances, so it's important to update your plans accordingly. Anna's habit of regular reviews helps her stay organized and prepared for any financial surprises. By regularly reviewing and adjusting your financial plans, you can ensure you're always moving towards your goals and maintaining financial stability. This habit keeps you proactive and in control of your financial future. Now, if you want to learn how to achieve financial success, then watch this video next. And if you made it to this point of the video, please like and subscribe to the channel to see more content like this. Thanks for watching, and I'll see you in the next video.